All right, there we go. Hey guys, welcome to the live stream today. Glad to have you here. It is March 1st, 2021. And for those of you who jumped on a bit early, I want to quickly apologize to you. I was just setting everything up, making sure that we were ready to go. And of course, I didn't realize I was live, so I went ahead and kicked myself back off just for the moment. And now we're back. We're live. Just thought I'd get this thing started a couple of minutes early to make sure that everyone could come in and we can get started. So, again, welcome to everybody. I'm going to do things a little bit differently than I did last week, and I'll get into that in just a moment. So we could talk a little bit about last week. Last week we talked about what's called the next catalyst, and we saw the markets actually heading into the negative zone, and we do see a lot of that happening this week too. So what I want to mention is that last week the markets did pull back, and I thought they pulled back a bit more than what my the expectations were heading into Friday. So a couple things happened today, and we'll get into that or happened over the weekend. First of all, Bitcoin, as you know, the one thing that does trade over the weekend, that was getting pretty oversold as we went into Saturday. We had a pop back on Sunday. That was good. Sunday night, the futures markets opened, and they were up close to 20 points on the S&P. I saw 1 percentage point on the NASDAQ. That looked good going to sleep last night, too. Coming into today, things just really has extended. And we'll talk about really a lot of the reasons why that's happening. But again, want to say hello to everybody. Let me tell you what my plan is for today. So plan is for today is that I want to like I said, do a quick review. I want to look at stocks, bonds, currencies, commodities. We'll look at the FANG stocks. We'll look at the ones that everybody's jumping into, without testing the waters. And I want to also, I'm going to be using Fibonacci again today. That was actually a lot of fun. I'll talk a little bit more about why I use Fibonacci, and why I call it one of the few indicators that I consider not lagging. An indicator that's not lagging. A lagging indicator is something where you're grabbing a bunch of data in the past, and for instance, a 30-day moving average. That's a lagging indicator. It moves 30 days beyond today's stock price. Now you might say Fibonacci is lagging because you have to have past points. And yes, you do need past points, resistance and support points. But what we're doing is we're projecting buy and sell zones that may or may not happen in the future. And that's one of the things I like about Fibonacci. Fibonacci is a great tool. When you use channeling tools, I like those too. I love volatility. Volatility and volume are great indicators as well. So we'll get into those. But more importantly, I want to also have you tell me what you want to see as a stock, and we'll throw it up real quick on Tom's Auto Fibs. I have something called Tom's Auto Fibs where you don't have to draw lines. We snap the grid based on the amount of time we're looking at. We're going to be looking at 100-day charts today with those auto fibs. All right. So finally, before I begin, disclaimer you see on the screen here. I put this up on every single event that I do, and you can read it in its entirety. But real quickly, two things I want to mention here on the live stream. Number one, stock, options, and crypto have large potential rewards, but also large potential risk. And number two, I'm not an investment advisor, okay? I do not give individualized financial advice. Now, because we're in this big room all together, I'm not giving individualized financial investment advice. So if you give me your charts, we'll be able to look at those, and we'll look at them on Fibonacci, maybe a couple of other things too. And so, again, I will do my best to get to as many of you as I can over the next hour. All right? Okay, so let's begin. So, again, the topics for today that I want to cover are market news and technicals. We'll get into market news in just a moment. What's making this market up the highest it's been in 4 months? We'll talk about that. We'll go into what I like to call SBCCC. Stocks, bonds, currencies, commodities, crypto. We're going to talk about FANG. We'll go into RIOT. We'll take a look at AMC. We'll take a look at GME very quickly. I also want to look at your favorites today. All right, so make sure you're texting me with your stocks. I'll try to get to as many as possible. And then I want to end the hour talking about how to find what we call explosive stocks. All right, explosive stocks are stocks that we use looking at what's called statistical volatility. A little different than what I talked about last week. All right, implied volatility is, when you imply something, you're looking at what's called a future prediction. Statistical volatility looks at past stock ranges, past ranges of assets. So we'll be looking at past ranges of assets from 6 days on out and try to find very quickly a quick list of what's moving the most right now. So that is the plan for today. So let's go ahead and start with our market news and technicals. This is what's going on. If you go and look at top trending, what's trending right now in terms of news? $1,400 stimulus checks. That's what's trending amongst America. Also, the minimum wage plan was dropped out of the Senate rules today, so I think that might have a little bit to do with what's causing stocks to go higher. You also have Bitcoin. Okay, so there were two news headlines in Bitcoin which made the trending topics today. Number one, there are banks coming out saying that Bitcoin could become the global currency of choice. The other one was a not so great comment by the New York Attorney General. He blasts crypto as unstable and very risky. So you got one good news, one bad news. Well, what's crypto doing? Well, it's actually been up today, but we'll take a look at it and see what's going on. I actually added to my Ethereum. I added to Ethereum over the weekend. Bought a little more Ethereum because I thought it was deeply discounted in the last couple days compared to Bitcoin and other cryptocurrencies. So we also know the Dow's daily move is up the most it's been in one day over the last 4 months. And a lot of this, the majority of this, is because the bond market finally got a breather from what was going on with bonds. Bonds were just getting killed. Yields were going up. Got a little reversal of sorts today. So that's what's going on when you look at top trending. So now let's go ahead and jump into the technicals. And so this is the part where we'll go into, all things crypto. So we'll go into all things crypto, all things markets. So popping over here, going into to log in to tomsoptiontools.com. By the way, if you want a free 2-week trial and you've never used our service before, then I would suggest there's a link. I think I added a link to the the group here. Let me just check real quick. I did. I'm going to put it back in the chat box once again so that you can see the link that we have going on here. Check out the chat box. I don't say much in the chat box because I can't chat and talk at the same time. I'm too old. But there you go. Free trial to Tom's Option Tools. This is a 2-week free trial. Pick anything you want. All right. We'll give you all of our top tools are in what's called the Complete Trader. Check it out. All right. Let's move on to. Actually, what I'm going to do is I want to change my desktop around, make sure everything's on the same page. There we go. All right, so we're going to go in here first and go into stocks, charts, and stock charts. And again, what I like to do here is I like to show you charts that you're not going to find everywhere else. So guess what? That means, okay, is it a candlestick chart? Yeah, you can find that everywhere else. But that red line you see there, that is implied volatility. That's what the options are doing. The near money options are doing on that particular asset. So for instance, RIOT blockchain just popped up. We'll talk about that one in a few minutes. All right, so I want to get to my stock list. I'm going to update this chart. I'm going to raise the level of the chart. We can see pretty much it on the screen, and I see that right now. So the only other thing I want to do with this chart is I want to add in the Fibonacci ratios. And so I'm going to actually get rid of the grid, and I'm going to add Fibonacci. Let's take a look and see what that looks like. That's a nice, clean chart that we see right there. So now we're seeing what I call Tom's Auto Fibs. Tom's Auto Fibs are just a quick way, and what we're doing is, if I could just bring up, let me toggle on the big pointer. And if I toggle on the big pointer, you know what? I want to change that to like a green. Let me go and change the settings on this. Let's make that a kind of a darker greenish. Okay, that should change. Didn't change it. Let's do one more time. Green. Okay. Hey, it's live. That's what happens. Okay, let's get rid of these. I think I just got to go 1, 2 from me to you. There's the green. Okay, so here you go. So what I'm looking at is these fib levels are based on this time frame you see here. This time frame is based on what we call trading days. So I've set the trading days back to 100, and I think that will cover everything for the most things when we look at for instance, looking at the pullbacks that happened in September and October. So if you take a look at S&P, we looked at this last week, folks. We looked at the fact that the SPY was down here around the 326.69 area, ran up as high as 392.73. We had a pullback. We were looking for a pullback to take us to 367.50. Did not happen. So obviously what happened with S&P is that it was reacting to what the bond market was doing, right? So we're pretty close to all-time highs again, and we're in an area right now. We're going into March. We could get a little bit of wiggle room here, but we're rolling into March. There is practically no earnings reports, none of that big piece that are coming out on this particular on the stock market. So no news is good news. And if no news is good news, and we've got stimulus checks coming and everybody's happy, that could cause the markets to pop again to all-time highs. I think we're going to wiggle around a little bit here. And I do think, though, that later in March, we'll start to see those all-time highs happen. But let's move forward and see what we like to call confirmation. Now, I'm not talking about Catholicism here, all right? This is a different confirmation. The confirmation I'm looking for is when I look at the stock market, I want to see if the other assets are confirming the stock market's highs today and the stock market's run in the last 100 days. So take a look at first the bond market. This is TLT. TLT, we've seen, again, we saw TLT go from 162.12 in the last 100 days down to 138.54. That was Thursday. We had the big pop on Friday. We've had a little bit of a pullback today, but we're well off the lows that happened last week. And that is, when I look at this chart, it's not telling me, oh my gosh, this is the number one reason the stock market's up right now. That's not it. But the fact that we're not at new lows today, that's a good thing. The stock market's been trying to find something to buy off of. So, TLT, still in a downtrend. Still dangerously close to the 138.54 fib low. And of course, the 136 and change low that occurred right here at the intraday low of Thursday. But again, because we're not making new lows, it's a breather for the short term for the S&P. And also the reason why I think that we aren't ready to go up and away again because of that chart right there. US dollar, UUP. So UUP caught a bid last week. Let me back up and show you what we're talking about here. All right, just before Election Day, UUP 25.40. All right, look at this, just before Inauguration Day, UUP 24.09. 25.40 to 24.09. You might say, Tom, that's what, $1.30? That's not much. This is the US dollar we're talking about. All right, $1.30 is a lot. That's a big deal. In fact, if we went back and looked at this all of 2020, you'd see the high in UUP above 29, and you'd see the low of UUP. We're talking about that low coming in here just recently. That's a big move. That's 20%. That's a near 20% difference between where UUP was March of last year and where UUP is right now. And I do expect the U.S. dollar to continue to get weaker as we're continuing to dole out more money. All right, so a little bit of a bid today. That's good. This is actually a positive for the stock market that we're not racing up or racing down with U.S. dollar. A stable U.S. dollar equals a positive stock market. All right. Okay, so come on over to USO. And you take a look at USO, and you'll see that this is now we're into the commodities. So we're talking about stocks, bonds, currencies. Commodities are the next piece that we need to take a quick look at. Now there are two big commodities I look at. I probably ought to start looking at a few more than two, especially for this group. But looking at oil, all right, oil, black gold, Texas tea, as the Beverly Hillbillies call it, but. USO has been on quite a tear since the end of October, where we've gone from a price of $25.25 on the low to $42.50 before pulling back. This is huge. This is absolutely huge. The big breakouts occurred last month, or really for the month of February, where we went from the mid 30s to the high 40s. All right, so this is a big deal. All right, so we're also coming into, and I mentioned this around mid-February to mid-July, we get a very interesting pattern that occurs with the energy markets, with dirty energy, right? 75% of the time, if you go back the last 20 years, dirty energy goes up between mid-February and mid-July. So this is one that I'm expecting is going to continue to move higher based on pattern recognition. All right, so the other commodity we look at is gold. Gold has been, this is, now, we can look at commodities and we can look at them two different ways, really three different ways. Number one, risk on. A risk on asset is an asset that moves with the stock market. All right, stocks are a risk on asset. That means you're taking risk and you're putting it on the table. And so gold, when you take a look at it, has it been, so think about the assets that are out there. Are they moving with the stock market? Back up. Take a look at USO. Yes, absolutely. For the last couple months, USO has absolutely been moving with the stock market. Now, what about GLD? GLD is, again, moving against the stock market. So this could be a risk-off commodity, but we've saw it fall when the stock market fell. We've been seeing it fall with the stock market rising. So this particular market is really what I like to call a random market. A random market is one in which it moves unto its own. And last week, we saw GLD pop down to new lows, right? Full disclosure, I went long more GLD. So by virtue of selling puts. So I did a couple of moves before the weekend started. One of them was that I added to my long position of GLD. And after the markets closed, I did go in and pick up some Ethereum. All right, for those of you that came in a little bit late, that's where I also went into. So let's pop back over to, now we've talked about stocks, bonds, currencies, commodities. I can move to crypto charts. So let's go ahead and do that real quick. So pop over to crypto. Here is Bitcoin. And I'm going to go ahead and update this to the latest chart. You can see what Bitcoin's done. Not really much of a move in the last hour, but we have popped up considerably. We're above 49,000 on BTC. BTC, we had our last buy signal was down here in the low 30s, and the sell signal came last week at just below 50,000. Now, since then, we've come down, we've cycled down, we've gotten a little bit of a pop. Now, those of you that are traders in Bitcoin, then, for me as a trader, I follow the signals. But for me as an investor, I look to add to opportunities like this. And so I have a cryptocurrency account that all I do is just buy and hold, right? Because I'm not ready to sell it just yet. Even with the, 20%, 25%? Okay, so take a look at the highs, which were 58,000, and take a look at the lows that happened yesterday. That was around 43,000. From 58 to 43, 4, 5, 6, 7, 8. That was a 15,000 point move in Bitcoin in the last week. So in the last week, we've seen Bitcoin move 15,000 points from 58,000 down. All right, so that's a good 25% correction off the top. Now, you might think, well, we're in bear market territory, aren't we, Tom? Well, one could say that, but this is the wildest ride of anything that I've seen outside of a few stocks that we know and we're going to get into. Because of this wild ride that's going on, I look at this and I kind of discount with the numbers that float back and forth. Think about 2017 for a moment. In 2017, Bitcoin moved up to near 20,000 and retraced itself all the way back down into threes. So we saw an 80% swing from high to low before we dropped to new highs. Hey, it could happen again, 80 to 90%. You got to realize when you're investing in cryptocurrency, whether it's Bitcoin, Ethereum, or one of the smaller coins, the altcoins, the microcurrencies, if you will, that you got to realize that the risks here are going to be more from top to bottom, right? So that's BTC. You know, the other one that I'm involved in that I'll share with you real quick is ETH. That's Ethereum. Now, Ethereum was above 2,000 and moved down to down below 1,300 yesterday before rebounding. And part of that is the reason why I decided to add to Ethereum, because Ethereum, in my mind, was more discounted in the last week than was Bitcoin. And to me, Ethereum, I just feel Ethereum is the better buy of the two at these levels. Now, everyone's talking about Bitcoin. Now, Bitcoin's going to be the boat that rises, or the tide that rises all cryptocurrency boats, or most. But Ethereum, it's backed behind a company. And so to me, that gives me added reason myself for why I like that. So there you go. That is ETH. I do like these on the swing. The question I have is, and you don't see it here, is let's add in the Fibonacci charts. And let me do an update with Fibonacci. And why I'm not getting Fibonacci is beyond me. Let me see. Let me get rid of the grids. Let's just do the stock itself. And there we go. So there's our Fib line. So take a look at Ethereum for a moment. Came down, hit the 38.2% retracement. That's pretty much where I got in at. And you see it dropped lower, so I was underwater yesterday. Now we're back above water. But I got in right around that 14, 17 area on Ethereum. Now let's take a look at Bitcoin one more time, and let's see what it looks like with these retracements. Check out the retracement here. So the lows are at 18. That was 100 days ago. The highs, 57,469. That was the closing high. And you see the pullback almost got to the 42,405 area. That's close. That is close. And so from there, we're starting to jump back up. We'll see whether this is something short-term where we double bounce off that low, or if we indeed are moving higher back up to the top. Obviously, time will tell. Okay, so we've looked at stocks, bonds, currencies, commodities, crypto. If I were to go back and just take a quick look at FANG, because that's on most people's list, what's going on. FANG is still, got a little bit of a bounce today, but still having trouble, especially when you look at a lot of the FANG stocks. They're not moving at all with what's happening in the Dow Jones Industrial Average, what's happening in the S&P 500 stocks. I'm going to quickly go through these. Facebook on the lower end of its Fibonacci, and you can see it's in a Fibonacci range where it's top to bottom, not bottom to top. We came up and we hit the 61.8% retracement before moving lower. And now it looks like maybe we might double bounce. We might have a little bit of a rally up to 38, maybe to 50% retracement. But these are resistance areas, not support. Apple, excuse me. Now, Apple is in an area right now where it's going bottom to top. So bottom to top is showing us support. First support point that we hit was 130.02. We went right through that, and we moved down to the 61% retracement level. Actually stabbed our way through it, tested it a couple times last week, and now we're back on the run. This is actually a great sign for Apple. And I know there was a lot of folks that were Apple picking last week. It looks like if you Apple picked on Thursday or Friday, you might have a great pick. We'll see. Amazon is really, you look at this one, and this one's bottom to top, or top to bottom. Top occurred back in the middle of October. Bottom occurred at the end of October. Since then, we wiggled our way back up, almost got to new highs, and then fell apart. Right now, we're in the middle of this fib range. So when you're in the middle of a fib range and you've gone back and forth almost the entire range, you're looking at support becomes resistance, resistance becomes support. So what's going on right now? We are seeing resistance numbers. If Amazon kind of climbs back up, it's got its resistance numbers right here, 31.72, 32.24, 32.75. These are all resistance until we get above them. Then they become support. So right now, Amazon still looks bearish. All right. I saw a news clip out on Amazon where there were Teamsters kind of in Alabama, kind of drumming up the $15 an hour wage hike. The Teamsters decided to go to Alabama because that is one of the lowest, that's one of the states with the lowest dollar per hour wages in the country. They thought we can get down there and push to $15 an hour. Didn't work out so well for them right now because it turns out that the folks working at this at the plant in Alabama are happier there than maybe working at a Dollar General where they could get paid even a lot less. And so I think it's going to take the Teamsters going to some states other than one of the lowest minimum wage states in the country to drum up support to have Amazon employees join the union. So that might be a little reason why Amazon popped a little this morning, but it's come off of its highs. It's come off the open as well. Netflix is a bottom to top. Bottom to top means that we made our bottom back just after the election, and that was down around 470.50, ran up to the top, 586.34. That happened just after New Year's. We hit a 61.8% retracement just a week later and almost hit it last week. But these are bullish signs, especially when I look at this chart of Netflix. I'm most interested in where the highs were last week and if we can close above those highs. And I'm talking about closing above the 555 range. Then that might be good news for Netflix. Moving on to Google, and I mentioned this last week. Google is of the FANG stocks. This is the one that has the most strength in it right now. It held the 2,000 range last week. As you can see, Google, if you go back 100 days on Google, you're going to see that its lows happened nearly 100 days ago, 1450. Highs 2118.62. That was a week and a half ago. We dropped down to around 2,000. That's support. That's round number support, 2,000. Nowhere near the 38% retracement level. And yet we're starting to climb back up again. So this one's not even one that we need to look at in terms of Fibonacci. If we look one more time at all of these, I'm going to show you this one more time. Let's go back and let's turn fib levels off. Now I'm going to move rather quickly here. I want to get past, just get to the stocks. Facebook, all right? Take a look at Facebook's at IV, low. Let me bring the grids back up so we can see it. All right, got to cycle through one more time. S&P, TLT, UUP, USO, GLD, Facebook. All right. Option traders, Facebook is cheap right now relative to where it's been. All right. Where has it been? The implied volatilities are down near 30. They were above 60 just before earnings. They're cheap. That means that the time values are half what they were just about a month or so ago. Take a look at Apple. Another one that is not as cheap as it has been, but it's cheaper than it was last month. Amazon, same situation. It is down near the very, very low ends. Now, that doesn't mean you're going to run right out and buy a call option on Amazon if you're bullish or buy a put option on Amazon if you're bearish. That's not what that means. What that means is that for me, normally where I would buy at the money, if I'm bullish on Amazon, I'm doing a spread. But normally in higher volatility, I put myself to more of an at-the-money spread, where with low implied volatility, I can go out of the money a bit because I want to take advantage of a little bit of a price jump too. So that's Amazon. Netflix, same thing, low, almost on its lows for the last 100 days. The highs were at 80, now we're down to 35, less than half. This is a half-off sale that's going on right now with most of the FANG stocks. And finally, Google. Now, Google has been higher, Google has been lower, but we're talking about something that was trading above 50 just last month that now, as we go into the 1st of March, is now trading in near the mid-20s. So almost a half off sale going on for implied volatility for FANG stocks. All right, so now is the time in which I want to spend a few minutes looking at your stocks. Now, I'm going to go back up to the top of what I was looking at in terms of folks that were throwing their stock symbols in early. So let's go ahead and start talking to Teresa about Boeing. Symbol is BA. Let's go ahead and put Boeing in here. Now, what I'm going to do, Teresa, and for the rest of you, is I'm going to set this up, and we're going to look at those three things again. The price, which everybody can see. The implied volatility, which very few people can see. Fibonacci, you can put there too. But you know what? Fibonacci is an interesting one because fib levels are all, those can be subjective, can't they? It depends on how far back you go. And how far back you go will determine where you find your peaks and valleys. And so it's just important to know that this chart right here can be subjective. I try to make it objective by looking at the overall market, determining where the overall low and the overall high was during that time frame, and then I'll apply it to stocks because most of the time we're going to be right in that zone. So BA, here's BA. Beautiful. BA is a bottom and top chart, meaning that the beginning part of the Fibonacci retracement started at the bottom. You know, we started at the bottom, now we're here. Whereas here? Here's near the top. We did come back and we hit that 50% retracement back at the end of January. And since then, we've kind of been on that run back up. And Boeing, some people got shook out of Boeing when, when the news casters showed that 777 that was flying with the engine that the outer skin of the engine fell off. And you could see the fire that was going on. But guess what? They landed, and there's still a lot of 777s still in the air. And so, as you can see last week, that caused a 2-day drop. But again, today, Boeing seems to be back. And Boeing seems to be gunning for its highs, its 100-day highs, up there around 238.17. That's what I see. All right, Robert, you were asking for two charts, and I'm going to give you those two charts. The first one you were asking for was IBM. Let's put that up on the screen. Let's take a look at IBM. And IBM is a bottom to top. But here's the thing, it's kind of sitting right in the middle of the range. It's got some great support down here at that 119 lows, around 119.15, which was where it was at on Friday. It's bounced above it. I'd love to see it get above this 122 level and close above that before we see IBM, looking for garnishing any moves higher. ADM, is that ADM? No, AMD. ADM is Archer Daniels Midland. AMD. Advanced Micro Devices, and Advanced Micro Devices looks a lot like IBM, is trading in sympathy to IBM, did pull back at the 50% range, but look what it did last week. It pulled back below the 61% range, but we have it snapped at $83.31, and it is above that. But again, just like IBM, I want to see that get above and close above that 50% range so that resistance, which it's at right now, can become support. All right, moving on down. Aloha, Amy. Good to see you here. George is asking for Regeneron, REGN. Let's put that on the screen. Guys, by the way, if it doesn't come up on my screen, it doesn't trade options. And so that's the only requirement that I'm looking for in a stock, if I'm going to analyze it for you, is that it has to be optionable, because I don't trade anything unless it trades options. So there you go. Regeneron is a top to bottom. And what I mean by that is that look at the top nearly 100 days ago, out here above 600. Look at the bottom just recently. That's at, the top was 607.98. The bottom was just on Friday, 450.57. And I have to say, this one, until we make a run up, we could get a pump up. And the first area of Fibonacci support is 510.70. But the fact that we are just one day off of the 100-day low makes me a little nervous about wanting to do anything in here unless you really want to. If you really love the stock, and I say this about any stock that's moving down like this, if you really love the stock and you want to own it, maybe buying or maybe selling puts, around the 450 level in this case or below that, gives you the ability to at least get paid for the privilege, for the other person's privilege to sell the stock to you at that price. but it would have to be at or below that price at expiration. That's an idea. All right, so thank you for dialing in there. I might skip a few people, and I'm not doing it for any reason other than the fact that my eyesight is not what it used to be, and I'm running through a lot of folks that are throwing some stock charts out there. If you have a stock chart or a stock symbol that you want me to analyze, just throw it in there. Amy, you're talking about XBT. Let's throw XBT up there on the screen. XBT, and there's the symbol, and there's no optional stocks online. Is XBT a cryptocurrency? I think it might be. We'll move over into cryptocurrency. RIOT. You know what? I did not get into the last couple ones that I wanted to look at, and RIOT's one of them. So let's look at RIOT right now. So thank you, Marco, for bringing that up. RIOT, RIOT. Now remember, RIOT Blockchain is a company that actually mines Bitcoin. This used to be a biotech firm. They basically shut their entire company, their entire mission statement. They wadded it up and threw it out and decided, we're getting into the Bitcoin mining business. That's exactly what they did. And the stock was ungodly cheap last year. I think it was 52 cents last year. And the stock went to $77.90. I saw that last week move as an opportunity to go bearish myself on RIOT Blockchain against bullish positions I had in Bitcoin. All right, so you tell me, because I was on here this live trade last week saying I wanted to put some bear put spreads on. How do you think I did with that? Just take a look at those last 5 days. You tell me. I think I did pretty good. All right, I did make some money on that trade, not as much as I wanted to, but isn't that the case for everything we do? We didn't make as much money as we wanted to. I didn't make as much money as I wanted to on this one, but the expiration was Friday, so wasn't that bad. All right, I had 40. By the way, I had 40 as my my target for Friday. Look what the low was on Friday. The low was $40.24. I mean, you know what? That's a laser target. I don't know if I'm going to be able to pick anything that good on that day for a long time. I've done it every once in a while, but that was pretty. I don't impress myself at all, guys, but that was pretty impressive. All right, so that's RIOT. So where does RIOT go from here? Well, RIOT is in the bottom to top move. RIOT did pull back with Bitcoin and pulled back substantially more. As we went from 77.90 down to 40.24, that was a huge pullback. Think about this. So Bitcoin pulled back 20 to 25% last week. RIOT pulled back 45%. I mean, it did a double on the pullback, but now RIOT's back on the move again because Bitcoin's back on the move again. So there you go. So RIOT has jumped above the 38% retracement level. If the rally in Bitcoin continues, I see this one going back up. But I don't think we're going to see 77.90 again until we see perhaps 60,000 or more on Bitcoin. I think we have to see 60,000 on Bitcoin in order to get back up to that level because that was just people were just falling over each other to buy more than a week ago. So I'm throwing that out there for you. All right, so that is RIOT Blockchain. Let's move on into, let's take a look and see what else we have in here as some potentials. And guys, my chart just jumped. HUTMF, that's going to be an OTC, and I don't have options on OTCs. So, Mohammed, we looked at Apple, and so just catch the rerun on this because it'll be out shortly after the live event. But we looked at all of the FANG stocks already and took a look at those. And maybe I'm just reading your comment before I even talked about Apple. So if I am, I apologize. All right, let's take a look at Kathy. I'm going to pick one of yours in here. I think CeeLo, isn't that been one that everybody's been all on top of? Let's take a look at CeeLo real quick and see what's going on. No, I have no options on CeeLo. Okay, that's not going to happen. How about AA? Oh, you know what? You're looking at crypto, and so we're gonna come back to crypto in a moment. Twitter is Southwest Airlines. I see TWTR. I got a buddy of mine who is a New York. He's a retired NYPD officer. And the reason I bring him up is he bought Twitter way back in the day at $50, watched it drop, and hung on to it. And now, literally this year, I'm starting to hear from him again because he says, guess what? Twitter's back above 50. And so now he's actually seeing his return on investment after years. I mean, years of being in Twitter stock. Twitter stock is at the high. Bottom to top, there is, right now, I see Twitter continuing to move higher. Although if it does pull back and it uses Fibonacci ratios, first pullback area, buy zone, $62.70. And that was based on the close of Friday. All right, 77.06. Southwest Airlines, LUV. Let's go ahead and take a look at LUV. All right, this one's also a top to bottom, and this one's also in that category where it's making new tops every day. 100 days ago, $38 a share. Today, actually, you have to go back Friday, Thursday, Wednesday. Wednesday's closing high was $59.20. And you can see here that it opened above that, but it's pulled back a little bit. Airlines got a boost because there's news coming out that's saying that we're going to start seeing more and more openings. Middle seats are going away. There's already so I had a lot of family come in for the weekend. Some New Yorkers that got tired of being in the snow. We made them mask up. We did a lot of outdoor stuff with them. They might actually be, if you take a look at New York, you take a look at Florida. The folks in New York might actually be better equipped and more worried about the virus than the folks in Florida are. So they came down. We still did the mask up thing. But I asked the question, and the question was, how was the flight? And more importantly, how many people were on the flight? They said the flight was at about 70%. One of the guys that looked around said about 7 out of 10 seats were there. Look, folks, we're coming in spring break right now. Spring break officially started last week, and we're going into March, and I think you're going to see a lot of people marching on these planes because, all these folks that have been stuck indoors, we all had a good laugh about it over the weekend. All the folks that were in school, that they've got to get out of school and go on spring break. There's a lot of folks that would say that people have been on spring break since about this time last year when it comes to school because they're no longer in school, but they are at home learning. And at home learning, I think that also takes a toll. And so we're expecting those occupancy rates of seat occupancy rates to jump up, and I am expecting those flights are going to be full. Now, that doesn't translate into flying like we saw pre-coronavirus last year because there are a lot less flights to get on. All right, airlines just have less flights going back and forth, but those flights are going to be full, and then they're going to start adding. We're also seeing that I believe May 17th is the day a lot of countries are going to allow overseas travel to begin again. Not all of them, but a good bit of them are. So this is also good news for the airlines. That's why you're seeing companies like Southwest, companies like Delta. If you take a look at DAL, going to see the same thing happening. And look at the DAL's Fibonacci chart. Same exact thing. The only difference is Delta had its low back at the end of October, where Southwest had its low right at the beginning of the screen. And you can see Delta's high. Very, very similar to what's going on with Southwest. This is industry-wide that you're seeing right now. All right. Let me move on. And I'm going to kind of come down real quick. I see Robert says, I don't know ADM. Archer Daniels Midland. You know what? I got to put it up there. ADM. This is a grain company. What's going on with grains right now and commodities? If you haven't had a chance to go to grocery shopping, go take a look and see what the cost of foods what's happening with the cost of food. Go to Home Depot. Go to Lowe's. Check out lumber prices. Plywood is selling for triple what it was this time last year, or a little less than a year ago. Triple. You want to know why home prices are going up? A lot of it's because of the hard costs. Some of it's because of the demand of people getting out of the cities and wanting to relocate because they can work from anywhere now. That is all happening. down here in Southwest Florida, we are now seeing, we're seeing what we saw over 10 years ago, about 15 years ago, is happening again here in Southwest Florida, where they can't put gated communities up fast enough. And they're now bidding. There's now bidding wars going on for lots in a lot of the developed areas. I can tell you, in the community I live in, there's not one home for sale, and there's always homes for sale. And my wife and I were looking at kind of, because the area we're into is getting, Sarasota is getting tighter and tighter and tighter in terms of more traffic. And we're thinking maybe we should move out and move into something that's got a little more space. Even though it's a winter home, we're thinking maybe a little more space. And so we thought, let's go out. But everything is selling. Everything is selling. Even the multi-million-dollar homes that we looked at, that just, that was a buyer's market. You just go in and you start lowballing. Eventually someone would take your pick. Not anymore. I mean, houses are listed, and within a week they're pending. That's what we're seeing happening down here. And so we're seeing a lot of movement from the Northeast and from the Midwest, the middle countries. So Chicago, New York, folks are coming down to Florida. Chicago, a lot of folks are moving to Texas. California, they're moving into states, just one state over, Nevada, maybe into Wyoming, and also into Texas. Right? A lot of folks in California can't handle the cold weather in Wyoming, and so they're looking at Texas as a relocation. So that's where you're seeing a lot of people moving to. If you are relocating, and you're on this as a side note, if you get a house, if you get a new house, put a generator on it. You'll be glad you did. All right, because I don't know what the power grid looks like in Florida. We seem to be in pretty good shape, especially in the newer communities. But it's always good to have a generator, because you never know when that hurricane is going to come and it's going to knock power out, which typically, if you're inland, that's typically the problems you end up having, is you'll be out of power for a week. So make sure you have something backed up. Obviously, a lot of people in Texas were wishing they were in that situation, but even the folks that had generators there, if you don't have gas, you don't have power. All right. Enough of that. Let me jump back on the stock train here. Peloton. PTON. So Peloton's an interesting one too. This one, it was bottoms up, bottom 100, top 167, but we have crushed through 38, 50, 61. So guess what? These all become resistance numbers now. So when you see Peloton last week trade all the way down to 110, 125.76, that's a resistance point. 133.72, resistance point. 141.67, resistance point. The other thing I will say about Peloton is that it now has some of the lowest implied volatility, some of the lowest option premiums that we've seen in the last 100 days. So just keep that in mind as well. All right, so that's Peloton. Larry, you looking at W? W. My wife has a lot of W, because W is Wayfair. And my wife is one of those investors who likes to buy stocks on things that she knows. She loves Wayfair. She owned Wayfair at some ridiculously low prices, and have seen this thing just go crazy. But she's going to be happy to know that this week Wayfair's back on the run again. Take a look at what's going on between Wayfair. Just in a span of about 2 weeks, it went from its 225 low to its 329 high. And that 329 high, folks, that's the closing high. Look at that big move up that got it up above 370 before it dropped back down again. Now, what's happened since? We have hit once, twice, 3, 4, and sat below the 61.8% retracement level before rallying higher. Right? So definitely back on the bull market run. Now, to me, I look at this one and I say, this one's got a lot of risk in it. It's got a lot of volatility risk. So if you like Wayfair to the upside, it might be one of those ones where you have to look at it and say, I'm going to wait till we get back above that high that occurred before I start getting long. Now, that's as a trader. As an investor, it's always great to invest in things that you're really, you look at and you say, well, that's something that would make the most sense if I was going to be in it for 5 years. Because if you talk to, some of my team and looks at the fundamentals, they'll look at the fundamentals of Wayfair and say, why is this company even still in business? But this is the world we live in now. When the dollar goes down, things that are even what we would call riskier down, even 2 years ago are the norm now. So that's Wayfair. All right, so let me do this. I'm going to wrap it up with the last few stocks here. I'm actually going all the way down at the bottom. And I'm going to take a look real quick at let me grab one more stock. And let's see what we got here. How about NIO? Let's see if NIO actually has options. NIO. Click on update. And there is NIO. All right, NIO Corp. This is also one of those favorites from the YouTube Reddit community is NIO. And so if you take a look at NIO, you'll see that NIO has 100 days ago, $20. Jumped on the Reddit train there back at the beginning of the year, and this thing jumped up to 65. Now, here's what I like about NIO. Haven't looked at the fundamentals of NIO, so we're just going to look at technical Fibonacci support. Fibonacci support last week came down and hit the 50% retracement area at 41.76. Right now, we're above the 31. That is great. Earnings. So do earnings on NIO come out today? Because I did not know that. I imagine they do come out today. So this is going to be a bit of, there may be a bit of rockiness here. If you take a look at the last earnings on NIO, go back here and look at what happened back in November, and you'll see that after earnings, it only dropped a little before moving higher. So if, one earnings report does not make a pattern, but that's something that you could look at too. All right, so NIO's earnings are today. But, what we could do, I'm going to sidestep for a moment, guys, because, we can do that here in live. But I want to go to an area. I'm going to go and look at, this is the last stock chart I'm going to look at today. I'm going to look at crypto charts next. But I want to go to an area called earnings effects. So the earnings effects area allows us to go in and look at any stock or a stock list. And what we can do is we can look and see, were there any patterns around earnings? So I'm going to go and look at NIO. And I want to see what the price change did after earnings, at least the last four earnings reports. So that's what we're going to look at. All right, so I'll come on over here, come on down, hit the search tab. That didn't take long. There you go. So this is what's happened with NIO. This is NIO. And here's what's happened to earnings just after the earnings report. Minus 4%, minus 3%, or minus 9%, up 3%, minus 9, minus 10, minus 27. So what kind of a pattern do you see here with NIO when you see the day after the earnings announcement come out? It tells me that the stock, at least 5 of the last 6 earnings, opened down the next day, right? I'll show you one more. So take a look at now, as option traders, we like to see what does the implied volatility, what do the options do? What's the best change after 4 earnings on the options of NIO? Let's hit that search again, and bam, we're done. Take a look at this. This is even worse. Minus 33%. These are the at-the-money options, calls and puts. Minus 5, minus 30, minus 31, minus 10. If you're holding calls or you're holding puts through earnings, you don't want to be doing that with a company like NIO, because NIO, the options drop. Okay, this is the part of options trading that the rest of the YouTube community, the rest of the Reddit community that are live streaming right now, they don't know about this stuff. Okay, all they know about is to the moon. We hope it goes higher. It's just a pullback. Buy. I'm all in. These are gamblers, right? I've been here doing this longer than I haven't. Okay, what I mean by that is that I'm 55 years old. I've been doing this longer than I haven't. And so by doing that, yes, I may not be able to move through software and move through things as quick as I used to. But I got a little experience and I got a little know-how what happens in the world of options. And so, when I see a lot of people saying, I bet on RIOT blockchain, and it went up, but I still lost money in options. How did that happen? That's because of that right there. Implied volatility, options premium. Okay, so there you go. Let's just do a quick little look at the crypto markets real quick. So I had cryptocurrency up here, and I was looking at Bitcoin and Ethereum. And so, as I come through, let's take a look and see. And you know what? I'm going to ask you guys one more time if you can throw a cryptocurrency. If you have a cryptocurrency you want me to look at, now I'm going to tell you right now, I don't look at all cryptocurrency, cryptos. I look at cryptos, myself personally, I look at cryptos that are in the Coinbase exchange. So even though we look at all cryptos, I typically stay within the Coinbase exchange, and that gives me access to a couple dozen cryptocurrencies. But if we were to look at like ADA, and ADA is not in here, but let me just look at all cryptos. Amy, you're asking me to look at something I haven't looked at in a while. There's ADA. Cardano. Okay. I mean, if we're gonna go bottom to the top, you can see it right here. We had that bottom to top. As you can see, we did have a top that occurred a little more than a week ago, and we dropped in and then rallied from that. But we're sitting just off of those all-time highs on ADA, right? FTM. Let's take a look and see if we even have that in the list. So I have these all in order. No, I don't chart. I don't look at FTM, so I apologize. Can't give you any comments on that one. EOS. EOS I do have. I know that one very well. There's EOS. You can see here that EOS has gone from again, bottom to top, $2.31 to $5.56. We came through the 38%, and this was just after the first week of February. Rallied back, but then went down, and we quickly went through the 61.8% retracement. We've been hanging on the 61.8% retracement now for a little bit more than a week. Now that I think is a great place as a trader, to me, as a great place to look at potentially a buying opportunity. Now, what do I not like about this? Currency wave is about to cross. So, but that doesn't mean it can't cross to the upside again. So this is one that I would definitely be looking at right now as a potential buying opportunity. To just me, all right. All right. So Amelia, we looked at Ethereum. I'll bring it up since it's real close to EOS and show you what we're looking at. So I'll let you know. Full disclosure, I bought some more Ethereum. I added to my Ethereum position after the markets closed on Friday, and I added right around that 38% retracement level you see there. So it dipped against me yesterday. It's kind of gone back in my favor today, but I have added into that area. All right. OXT. I'm going to go back to Coinbase because I can get to these a lot quicker. OXT. There's OXT, and we'll take a look at that one. And OXT is also one of those ones where, beginning of the year was the beginning of what we saw the bottom to the top range. 22 cents, 71 cents. We came back, and we're now sitting. Now, this came dangerously close last week to the 61.8% retracement, but we're back above the 50 at 46. This is another one that could be giving us potentially a bullish opportunity. All right. And Doji, I will not look at. All right, how about, is DGB in my list? Let's take a look and see. It's not in the Coinbase list. Let me just go look at all cryptos one more time, and let's see if we've got DGB in here. And there's Doji. I guess I should look at Doji. Is it DGD, not DGB? Am I just reading it wrong? I think it's DGD. So we'll take a look at DGD. That's Digix, Diocoin. Nice move all the way up from, again, 104.96 to 376.62. Pullback and is holding the 38% retracement range. Now, another reason that I look at, and I'm going to end with Doji, guys, and then I want to show you one more thing before we kind of finish up our hour. So if you take a look at the majority of the cryptocurrencies I've shown you, they've all done what? They've all had pullbacks, all right? And they've all hit, not all of them, but most of them have hit that area where we're seeing some sort of support. and a bounce off that support. And that looks like that has occurred with a lot of things, if not this weekend, late last week. So that gives me reason to rejoice, if you will, in the crypto community. So we've got that, and let's look at Doji. I just found out that Apple Magazine, I don't know if Apple actually runs Apple Magazine. I'm going to probably say that they don't. But Apple Magazine says Doji is going to be the next Bitcoin. I can't even get that out with a straight face. Take a look at Doji real quick here. 100% low back in December was at 0.0031. Yes, it was not 3 cents. It was 0.3 of 1 cent that went up to 7 cents, 7.88. It is pulled back. It is currently trading just below the 5 cent mark. It is holding pretty good, around 38% retracement. Plus, you got to remember, you got a lot of those Reddit guys out there that are trying to push this thing. And so, to me, pushing this thing, it is for a short term, could hold this at the levels that it's at right now. But just like any cryptocurrency, if you are on the long side, and most of us are on the long side, then you might keep in mind that when they go down, there's no shorts that are short covering. The only shorts that are out there that I know of that are in anywhere in the Bitcoin or in the crypto community are in BTC and ETH. And the reason why is because there are futures contracts that trade on Bitcoin and Ethereum through the Chicago Mercantile Exchange. So for every one person that's buying that contract, somebody else is selling. So there are sellers that have to buy back that could help prop the prices up when we see the drop. All right, so before I get into my last point that I want to cover today, which is we want to look at explosive options or explosive stocks. I want to talk about explosive stocks. Before I do, guys, if you haven't yet, I haven't asked this before, but I'm going to ask it right now. If you found that my live stream and what we're doing here at Tom's Trading Room is helping out your education, do me a favor and hit that like button, all right, on this thing, because that is going to it's going to make me want to do these more and more and more, right? And what I mean by that is that, I have these scheduled on Mondays at noon, but there's no reason that if I'm sitting around and I got nothing to do except look at my computer, that I might just pop on in and do another one of these. And I'll tell you what, if I do anything these that are going to be outside the Monday environment, make sure you subscribe to the channel, because that's going to be the only way you're going to find out about it. All right. If I'm doing something that's going to be on a Tuesday, Wednesday, Thursday, something like that, if you have not subscribed to the channel, subscribe to the channel and make sure you ding that bell, because if you ding the bell, then you're going to be notified if I do a live stream on an off day. And I promise you, I will be doing live streams on off days from here, from point to point. Again, guys, the big thing we do here as I get into my explosive stocks, which I call, we call them IV expensive cheap, but I'm going to run the explosive stocks for you today. The thing we try to do here is what 90% of the YouTube community just simply doesn't do, and that's to get out of buying stocks if you like them, right? Showing you how to be bullish on the stocks, showing you how to be bearish on stocks, and being a little choosy when it comes to overall options. And what I mean by that is don't go out there and buy the stuff that everybody else is buying. And the reason I say that is because we have a line on our charts that can tell you exactly what it is that we're doing, all right? Exactly what it is we're doing based on what the rest of the community is doing. So if that line is on the high side of the chart, I know everyone's buying options in that particular stock, and maybe I want to be a seller of those options. Or if the line is lower, I want to be a buyer of those options because everyone else is selling, or they're just simply not interested. We'll look at two charts today. I want to look at the explosives, and then I'm going to go in and I'm going to show you what everyone's not looking at. How about that? So explosive. Now, so for those of you that are kind of new to, I try to dummy down the mathematics as much as I can, all right? Because nothing is more boring than listen to a person talk. I mean, it's one thing to listen to someone who's so amped up and emotional about stock picks that it actually it almost catches you to want to do something you normally wouldn't do. I'm not that. I'm a rules-based trader. But at the same time, the last thing you want me to do is go through and explain what the Black-Scholes options pricing model is. That'll put us all to sleep. So I'm going to try to do my best to kind of dummy down the math like I typically do. And so here you go. So what we've done here is I ran what's called the explosive stock list. So what we do is we're basically looking, see where it says 6-day SV, 100-day SV? What the hell does that mean? Here's what it means. We're looking at the 6 days, the last 6 days of stock movement. And we're looking at that over the last 100 days of stock movement. And we're basically looking to see which of these have the highest 6-day to 100-day move. And what that means is that what's moving right now. What's moving right now as opposed to where it was 100 days ago. You take a look, and I've already ran this for this morning, and I see InvestNet is at the very top. So InvestNet shows a couple things here. We have a closing price, 64.02. We have a 6-day statistical volatility. That's 6 days trading range, all right, at 151%. That's a percentile, by the way. It's not an absolute number. There's a 100-day percentile, which is just below 48. So you can see it right now is trading at just above 3 times. The 6-day move is trading at more than 300% of its 100-day move. That's what this is telling us. So that's how we rank it. Ken, you would actually be interested in the Black-Scholes option model. Maybe I'll do a video on it, all right? If I do a video on it, I promise you, if I look at the statistics on that video, it's going to have the least amount of time watched, no matter how long I do it. And it will probably have the least amount of likes, too. But yes, I agree with you, Ken. There are people out there that definitely want to do it. So I'm with you, buddy. All right, so InvestNet. So I'm actually going to click on InvestNet. That's going to bring open the chart, but it's going to look at a different chart. We're not seeing a price chart on InvestNet right now. What we're seeing is what the movement of InvestNet has done, and the red line is the 6-day vol, and the black line is the 100-day vol, and that's what we're measuring. And as you can see, over the last 6, 10, 20 days, InvestNet's actually been ranging a lot. So you know what we got to do? We really got to look at ENV, and we need to look at its chart type and look at the stock chart. And what is going on with the stock chart that's making this thing move around a lot? There you go. It had a bad earnings report, so guess what? It's moving from close to close, got a lot higher just in the last 3 days. So when we look at 6-day SV, it's looking at those last 6 days and realizing that those two are quite a bit of a distance away from where the other 4 were. All right, so that's InvestNet. Let's go back and take a look at the Pro Health NetApp. Here's one. If I look at NetApp, here's one that we've got some folks in here that know. So let's look at NetApp and see what's going on with it. Again, 6-day high, all right, over its 10, 20, etc. This looks like an earnings report too. And if you see the little triangle right here, it's telling us that, again, earnings came out and this stock had a big, big move. Now, what I'll do, though, is I'll go through and I'll look at these. And I'll say, all right, who else is on this list? There's Unisys. Let's look at number 10. Unisys, same thing. Earnings, bang. So the way you really want to look at an explosive list is you want to look at an explosive list from where? You want to look at it in between earnings, because then you'll see stocks that are on the move, and it's not something that an earnings report caused. Right? So that being said, let's flip over and let's look at what everyone else is not looking at. And to do that, I'm going to go back up to my expensive options, my expensive cheap category. And I'm going to slide to the right. And I'm going to see that I am looking for, again, quiet. Now, quiet options are ones where their SV is at or very low to or below the 100-day. So what's going on right now is you see stuff like RealPage. Take a look at RealPage. $86 stock, 3.25 SV, 43.35 the last 100 days. So it's basically trading at 0.07% of its 100-day. Now, RealPage could be coming into an earnings report. Let's take a look and see what's going on with it. And as you can see here, you can see that it did have its earnings report already. Now, let's take a look at the chart, because I want to see this chart. and I want to look at it for something else because I know, all right, here we go. So this one jumped up and started moving sideways, and it looks to me like, without even looking at the news, that this particular chart, this company's being bought. It's being bought, being merged. Something's going on with this company, and not a guarantee, but I'm just telling you by looking at this chart, it looks like it's a takeover. All right, back to expensive cheap again. Let's pull down the one we know is not being taken over, and that would be Pfizer. Pfizer, Eli Lilly. Let's look at Pfizer because Pfizer's, been in the news for quite a bit with the COVID vaccine, right? This was when the COVID vaccines were first being released. Now take a look at the statistical volatility as this has dropped significantly, even past its earnings. If you take a look at the stock itself, and I'm going to bring up the stock itself by just looking at the stock chart. What's going on with Pfizer right now? Well, Pfizer's no longer at the forefront of all the news announcements. The news announcements have been Moderna, as it's been dropping. News announcements have been, more recently, Johnson & Johnson, because now they got the single shot that's out. It's going to be released very soon. It's already got approval. Pfizer went from that 36, 37 level all the way up to 43, dropped back down, had an earnings report that did not meet expectations, and has been slowly falling lower. You know what else is interesting? The stock's implied volatility has been going lower too. So if you had any kind of a rules-based pattern, any kind of an idea on where you thought Pfizer was going, the absolute best time to be buying calls if you're bullish, or buying puts if you're bearish. Well, guess what? They are right now. And that's because of that red line, which is your at-the-money implied volatility. All right? So, guys, yes, this is being recorded. Thank you very much. Hey, be sure to hit that like button if you really do like these live streams. Like I said, if you're a subscriber to our live streams and you ding the bell, I can tell you this. Subscribe, ding the bell. I will be doing special live stream events just for our YouTube community, just for our YouTube subscribers. So, guys, we will have this out. It will be available to you very soon. All that's got to happen is once I end this live stream, they've just got to go ahead and throw the edits in place and publish, and it'll be out there for all of you to look at here very, very soon. Thank you all very much for joining me. Hope you enjoy the rest of your Monday, and we'll see you again. Now, my next live stream that is published will be next Monday at noon. I will have a YouTube video out sometime tomorrow. All right, we're going to be doing we do videos here on the channel every single week. We got a podcast that comes out at the end of the week, so be sure to check that out as well. Chris and I are now video podcasting, so any of you that don't like podcasts because you can't see us, well, we now have video podcasting software, and we're now video podcasting. I'm from my office, he's from his, and we're just bantering back and forth about the week's events. So thank you all very much. I love the comments. I appreciate the comments you have down there, guys. And again, we'll see you soon. Bye now.